Hey, good afternoon, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Friday, and it's September 6th. Hope you guys have great plans coming up this weekend here. Basically, we're at the close of the day, and we got just two economic news releases, but these were the biggies for this week. And we'll start off with the non-farm payrolls for the month of August. So we had some revisions to the previous 2 months. Well, we had July as well as June. Revisions actually worsened. We lost over, they revised it to 70,000, around 70,000 fewer jobs, and this was actually up a rate around 160 some, and we was reduced all the way to 104,000 in July, and then June was also revised lower as well. So the forecast for the month of August was 173, and actually came in disappointingly at 169. We also got the headline number, the unemployment rate for the month of August, and we had a 7.4% unemployment rate for the month of July, and the forecast just remained the same, but it actually improved a little bit. Now, if you look at the what they call the U6 number, when people are falling off or people are qualified to be able to work but are not working or just working part-time, that number is actually was reduced from 14% down to 13.7%. So that's still a big chunk of people that would like to work or working just part-time or have the ability to work, but they simply just dropped off the grid and are not being part of these headline numbers that you're seeing right here. So it's still a big chunk. We're in double digits right there. Actually, almost, when you think about it, it's almost double the number here. So something to be concerned about. Now, with those in mind, this was important because part of the data that the Fed's going to be looking at before they consider tapering or even this quantitative easing or easing up on their stimulus package was unemployment, and also they're looking at inflation. Obviously, these numbers here were pretty disappointing. They're kind of now hedging that maybe they may not taper off this meeting, maybe later on. So these are some of the things that the investors are kind of looking at. So let's go ahead and take a look at the headline news, which is stock market ended up mixed. The Dow was down. It started off pretty much all the markets started off down further because there's also comments that Putin had made out during the G20 meeting that basically they've been aiding Syria all along, and if the U.S. strikes, that they're going to continue aiding Syria. And then so the markets kind of reacted at a negative moment when those comments were made. Later on in the day, Obama kind of reiterated saying that basically we're not going to have ground troops over, but there'll be airstrikes going in there if the U.S. goes ahead and attacks. But also, there's also some sentiment in the House that maybe they may not give the approval to go ahead and provide military support. So, he's not getting the full. Obama's not receiving the full support even at home, especially on the international level. But even at home, he's having a hard time selling the Syria case here. Now, also during the day here, we had a couple of Fed members make comments. Ms. Evans basically saying that he thinks that we need to see at least stronger data to support tapering, and he's not seeing that yet. He's not in favor of tapering. Esther George has been a very critical about the stimulus package and basically could see it maybe tapering off to 70 billion versus 85 billion per month. So the tapering she's all in favor of. Those are comments that she made. So this kind of put, again, a little bit of stir in the markets as to uncertainty. Are they going to or aren't they going to? And they'll be meeting on the 17th and 18th of this month for the for the FOMC meeting. So that will be obviously in 2 weeks now. Will be an important time here. So let's go ahead and take a look, see how the bond market reacted. So as you saw, the last 2 days we've been getting hammered here. Yesterday was no exception, and yesterday was pretty bad. We dropped down the 97 range. Now we ended up closing at 97.91 yesterday. Now today we actually started the day off at 112 basis points, which equals just over 1 point improvement in the pricing. So that put us up way up here, as you can see here. But as throughout the day, when the markets kind of settled, some of the money went back into the equity market, and we had kind of a drawback of a negative 38 for the day. Now, as you can see, we had an opening gap here, and we basically closed that gap with the weaker bond market as we did. But we did close up still higher than where we left off yesterday, which is approximately 70 basis points higher. So that's almost 3/4 of a point that we were rewarded back from yesterday's pricing. So we did get, even though it shows negative at the day, but we are higher up on the chart and show improvement in the interest rate. So nice sign there. Now, if this could continue, this could show us a nice trend. We need a couple more days of this. If we keep having higher highs than lower lows each day, we could see a nice trend upwards, which would bring better interest rates. So be prepared next week for some volatility, especially with the whole Syria situation. And thanks for watching. I hope you guys have a great upcoming weekend, and we'll catch you guys on Monday.